Hello and welcome to the Daily Forex Report for August 8th. We are looking at the US-Japanese yen pair. This pair created an inside bar, closed down. We are looking for it to overall continue moving sideways. Look for it to potentially go as high as 78.92, possibly as low as 77.89. Look for some resistance around 78.75 and look for some support around 78.05. Now, looking at the Euro-USD pair, this pair closed lower during this last session. Overall, long-term trend still up. We are looking for it to potentially go as high as 124.51, possibly as low as 122.62. Look for some resistance around 124.40 and look for some support around 123.25. Now, the pound-US dollar pair continues to move sideways, consolidate down. It did close higher. Did create an inside bar during this last session. We are looking for it to potentially go as high as 157.63, possibly as low as 155.13. Look for some resistance around 15700 and look for some support around 155.95. Now the US Swiss, this pair closed higher during this last session. We are looking for it to potentially go as high as 0.9790. Possibly as low as 0.9648. Look for some resistance around 0.9750 and look for some support around 0.9650. Now, as far as news announcements go, we do have the Bank of Japan releasing their rate decision for August on August 9th. The consensus on that is that it's held at 0.1%. No big surprise there. At 4 a.m. Eastern, we have the European Central Bank publishing their August monthly report. Of course, the numbers have already been released, so most likely it will not affect the market. Then at 9:30 p.m. Eastern, we have the Reserve Bank Board statement on monetary policy for Australia being released. Here again, numbers have typically been released beforehand on all of these reports, so it does not usually move the market. Now, what am I looking for during this next session? Well, the US-Japanese yen has proven to stay within its range, moving sideways overall. I do believe a breakout is imminent, but when? That's the big question. You can see that we've had previously times where the market has moved sideways to a large degree before breaking out. Of course, once it does break out, it does head pretty quick to either the downside or the upside. If we count just how many days, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days in a row where we had pretty much a sideways market. Now, if we move over just to kind of take a look at what's happened over the past few sessions, depending on where you start, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Just started the 12th one. If you count this one, we're at 13. If you count that one, we're at 14 days. So a breakout is coming. It's just a matter of when. Not positive as to the time frame. However, if we draw a line at the high here and we draw a line at the low over those past 14 days, if you had done that previously, you would have gotten in at a decent price there, putting a stop loss above the high and grabbing pretty much a 1-to-1 risk to reward. If we take a look at that, let's just look at the numbers. Stop loss at about 96 pips, about 100 pips there to the downside, about 117 had you gotten out the low. More likely, using a 1-to-1 risk to reward, you would have made a profit. So, not that it's going to repeat exactly like that, but nonetheless, that is one way to use historicals looking forward if it's tending to do the same thing, which in this case, it pretty much is. If we back out even further, let's go to the weekly time frame. We can see that we have somewhat of a trend line right here, and we're at a low at this point. Just draw that there, and we'll zoom back in. Just so you can get an idea, over the past 2 weeks, we've created this low. Break below it would mean that we should go down. Let's just see what this looks like on the weekly time frame. Down on this one about 56 pips or so. So I hope that helps, and until next time, this is Jason Fielder. Good trading.